Hi, I'm Ant Joblin and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. Our analysts have been hard at work once again and have identified an interesting opportunity in the aerospace industry. TransDigm is a manufacturer of precision components and parts for the aerospace industry with a market cap of $27 billion. The firm is made up of 50 independent subsidiary businesses which operate autonomously under their own strategies in order to better serve local and regional markets. It's a pretty unique operating structure and one that supports 60 locations across the USA and employs 8,000 people. As a group, the company manufactures a wide range of aerospace components, including mechanical and electromechanical controls, ignition systems, and engine technology, as well as cockpit security components and systems, specialized advanced cockpit displays, and much more. Of course, the aviation industry and its supply chains have been hit hard by COVID, and TransDigm were no exception. When the company reported Q3 2020 earnings back in early August, there were some very sharp falls in revenues across its commercial aviation, aftermarket and defense-related businesses. Overall, group revenues fell 32.8% below those seen in Q3 2019, though interestingly, profit margins at the business improved by 1.1% despite the reduced turnover. That all translates to a drop in earnings per share to $1.54 per share, down by 66.9% when compared to the same period in 2019. Despite this tough business climate, TDG's stock price has risen by 53.3% over the last 6 months and continues to make steady progress back towards the 3-month high of $526.23 and the 6-month peak of $537.56. It's interesting that insiders have been buying the stock over the last week. Robert Small, who works for specialist growth investors Berkshire Partners LLC and sits on the TransDigm board, has been adding to his holdings in the company. In fact, Mr. Small has made some large share purchases, buying just over 103,000 new shares at prices between $505.15 and $511.05. Following these purchases, Mr. Small's holding in the company is now more than 2,410,000 shares. Investment bank Credit Suisse has chosen to raise its target price for the stock by $104 or 21% to $577 from its previous target of $473. The Swiss bank's move follows a recent price target shift from Barclays, who moved up to a target price of $550 just over a week ago. The consensus rating for the stock among Wall Street analysts is a buy, with a price forecast between the 15 analysts who cover the stock of $505.47, a level that the stock price has comfortably exceeded in recent days. From a technical standpoint, the stock screens well on momentum measures, having made 12 fresh 6-month highs, 9 3-month highs, and 8 new 1-month highs in the year to date. What's more, the stock has outperformed many of its sector peers and is in the top 10 performing stocks in the aerospace and defense segment over the last 6 months. The stock price recently moved above a zone of resistance around $518.90 that should allow it to run up to $530 and then retest at 6-month high. There also looks to be scope for a golden cross on the daily chart as the 50-day moving average heads up towards its 200-day peer. TransDigm is exactly the kind of stock whose share price and end markets would benefit from an early and effective COVID-19 vaccine. A vaccine should allow the economy to normalize and in particular allow people to start flying and traveling once more. In all, this looks like a well-positioned stock with an influential insider loading up on equity. We think it's definitely worth a closer look. Remember, always do your own due diligence before making any investment decisions. Safe trading.